The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start the day like we usually do with the DAX index using the daily chart. As you can see, we're up here at that same area of 12,600. That's a 1.618 expansion and a 707 retracement. The difference between 707 and 0.618 is quite small for trading purposes, but it is definitely a Fibonacci number being the reciprocal of the square root of 2. However, what I'd like to talk about today, I'm going to split up the show into several segments because we've got a lot of things happening in the foreign exchange and the interest rate markets and also in the stock market. And we are over, of course, the new moon yesterday, which marks the start of the Hebrew religious cycle, Rosh Hashanah to Yom Kippur. And then we also have the equinox, the autumn equinox is going on right now. So this is going to be a pretty increased cycle time. I received a very interesting email from our good friend Bill Meridian of Cycles Research out of Vienna, Austria yesterday. He highlighted about 20 things historically that have caused major moves in September, all of them negative. Historically, I wanted to bring those to you today, but unfortunately, my computer has hidden them from me. But Bill is going to come on the show just as soon as possible. Hopefully, we'll have him on tomorrow so that he can go over some of these things to look at it. As you know, we've been looking for a turn down into September, October, and the market has not got the memo yet, but it's coming. Okay, let's take a quick look at some of these markets. After the DAX, let's take a look at someone's asked a question about their favorite stocks, which is Bitcoin. And as you can see, we did have a big Gartley down there at that $3,000 a share level. Boy, I can't believe I'm even saying that. And that was a perfect 61% retracement off the low back on July the 15th. That tells you that this stock has some pretty serious volume in it because when you have Fibonacci numbers work this closely, that means you have the public interested. Now you've had the rally back, but what you're going to be looking at now is the retracement back is going to be around 4,200 is going to be the 61% retracement in the Bitcoin, so kind of watch that because that would be a head and shoulders pattern going back to August the 15th, and then the head being on September 1st, and then the right shoulder being this week coming in. So we kind of keep an eye on that if you trade Bitcoin. And frankly, I don't know if any. In fact, I know of nobody that does this. So let's watch it as we're going. But anyway, I wanted to. We covered the Bitcoin. Oh, someone's asked a question about Amazon, and I'm going to bring the chart up here because Amazon. Wait a minute. Bill happens to be listening to the show, and I was referring to those that special report you sent out with all the things that were happening that were negative, Bill. I don't know if you're able to come on the show at the break, but if you could and are listening, would really love to have you. So we will see. Let's see if we can get him on. See if we can get him on for tomorrow. I'm Skyping him now from. And then we'll have him back on. Hold on one second here, and we'll see if we can get him on. Okay, we'll cover the euro in just a minute, Mr. Z, but let's get some of these other things out of the way because hold on one second. We're going to have Bill Meridian on tomorrow, and then. Well, hold on. I'm trying to type and chew gum at the same time. Okay, there we go. All right, let's take a look at the euro here, folks. Let me make sure we get this up here. So we're going to have Bill on tomorrow. Anyway, we'll put this up and show you the Amazon chart. And folks, if you remember, I started last week with the Apple. Apple has made a major top. I don't think there's any question about that in my mind from a technical basis of the perfect 1.6183 drives that we had over a period of 4 years. The way it's broken from the high is another reason. In fact, with this iPhone 10 that came out, and then yesterday they had a special type of a I don't know what they call those things. Boy, my mind is slipping a little bit. Anyway, it was showing that a lot of people were not going to buy the darn thing because it was just too expensive. But I don't know if that's going to make the thing go down. It's just got a bearish chart pattern. Looking at Amazon, you're looking at the same thing, folks. Look at the Amazon chart. It made a high up at the 1.618 up there to 1,084. And now we've completed a head and shoulders pattern with perfect symmetry from the left shoulder to the right shoulder, and it's right at the 382 level. We went a couple of bucks above it, and now we're trading below it. That's another bearish sign. To complete this, all you have to do is get below 935, and that's going to complete this pattern on Amazon. So Amazon also has a very bearish pattern. This thing topped, way back on July 28th. So even though we've gone up higher in some of these other indices, like the NASDAQ and the S&P, Amazon and Apple are not joining the parade. And that they've been, they were the leaders. They're part of the, the hallowed 6 or 7 that they have, along with the FANG stocks. So anyway, that's what those were the questions that we had from last night. Now let's move on to the euro. We want to thank Mr. Z about this because he brought this to our attention yesterday, and that was this head and shoulders pattern that we were looking at in the euro coming in yesterday. It came in spot on, right within 2 pips of the exact 78% level, and immediately dropped almost 200 pips straight down. And that was due to the fact that they're telling us now that there's possibly going to be a rate increase in December. Well, the market has been telling us that for quite some time, folks. If we take a look here at the bonds that we were looking at yesterday, you'll notice that it was setting right at the 61% retracement, and we felt that it was most probably going to break below that, which it did. It's trading there again right now, but this market has basically telegraphed that interest rates are going to go higher. That's the main thing. I've had a request to bring that chart up on Apple to show the 1.618 expansions on the long-term time frame, and you'll be able to take a look at it. Folks, back in 2012, when Apple was up at that $100 a share, it's making that little butterfly pattern at point A, I was asked to give a special webinar on Apple, and I was saying that was going to be a major top at that time, and of course it went down for well over 6.5 months and bottomed right at the 78% level. Now, what should we expect? Well, the very first place we would expect it would be the old high that we made back at 130. That's down 20-some points from where we are right now. But frankly, I would think the 61% retracement of the whole move from 53 all the way up to 165, that would take us down to about 96. So that's would be my goal that I'd be looking at for Apple, would be about $96 a share. How could that happen? With all the good news? Very, very easily, folks. We've seen this happen time and time again, where you have good news and the market doesn't respond. So that's what we're watching here. So let's take a little break for us.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Look at the precious metals here. As you can see, platinum went down to the 61% retracement level last night. Unfortunately, as you can see from the next chart, we've broken another $8 or $9 below that, which tells you that it's going down at least to the 924 level. I don't know what the last price is, but that's what we're watching here in the platinum. And next thing we want to do is to take a look at the gold market. If you'll remember, in that gold market, we were saying that we should have some really strong support at this 1296 level, which was down 2 harmonic numbers, and also at the 382 coming in at 1296. Well, we've shattered that this morning, folks. We've broken below 1296 down to 1291, which is a really strong indication that gold is heading down at the minimum of 1288. That's the 1.27 expansion. But let me get this chart up so we can talk the same language anyway. You'll notice here, when we broke the 1296 level, the only other number that you have there is the 1.27 expansion that comes in at that point. That comes in at the 1288 level. The fact that we're down well over $30-some an ounce today is unusual. But folks, that doesn't mean it can't go a lot lower. It's down around $23 right now, I guess. I was showing it down $30 a little while ago. I don't know what happened. So we'll see. Oh, maybe I was looking at silver, because silver was down 40-some cents. Yeah, silver was down 40 cents. Platinum's down $12. Now, platinum is getting close to the 78 percent level at 924. We're at 932 in platinum now, but still not quite ready to not quite ready to move. Okay. But anyway, the key here for me was, of course, that 2 harmonic numbers down from the high, from 1365 to 1296 was 68. 68 divided by 34, which is the harmonic number, is 2. So we didn't hold that. So, I mean, that was the really good spot to buy gold, and you didn't have to risk more than $3 to see if it was going to be right or not. And in fact, it held it for several hours last night before it rallied from, it got down to 1296, rallied to 1302, and then gave up the ghost and has continued to go down. I believe we're trading, we got down to 1291 again and rallied a few bucks. But once it broke that number, that was telling me that we were pretty much at an area where we really didn't want to get involved in the metals anymore. But there's one metal, folks, that is under the gun. I mean, you talk about a death wish. There's one coming here in the people that are long copper. Let me just show you this chart in copper. And as we talked about yesterday a little bit, the fact that we had that small dead cat bounce from late last week into yesterday, and 3 days of this week. And notice now that we've broken down and closed substantially below the 78% level. Folks, this chart has got 270 written all over it. I mean, it's just, and that's the 1.618 expansion. So my assumption is that we're heading down another 20 cents in copper. And if it doesn't hold that level, you're going to see, probably 240 copper before very long. But this is a very bearish chart, given the fact that you had the perfect ABCD structure going back from November up into January. It made a perfect 382 retracement, just a tad below it. And then look what it did. It made a beautiful ABCD move to the top, and now we've had a pretty good correction. We're already 20 cents down in copper in just 3 weeks, and with no bounce. Well, if that 4-day bounce we had is all you get, 4 cents in copper, you can see what the potential could be for copper to come to the downside. The $64, the question is, does this have any relationship to the stock market? And my answer to that would be, why would it? I mean, nothing has stopped the stocks. I mean, Shane Smollion's had this nailed right to the wall. It seems to be the Fed juice, and it's not Beetlejuice, but it's Fed juice, but that's what's running this puppy. And as long as they're in control, this thing doesn't want to go down. It doesn't make any difference whether it's nuclear war, 3 Class 5 hurricanes, major earthquakes in the southern hemisphere, right up, right south of us here in Mexico. It's just really an amazing market that it's been able to do that. However, if we do look at this, but through the eyes of the IWM, which is the Russell 2000, we want to let you see that it has not made a new high as of yet. You can see the blue line, which is the Dow Jones Industrial Average. It's gone substantially above the old high, but the Russell has not. Now, the Russell is a very small index. I'm just bringing this to your attention because if you're shorting something, you want to short the thing that is the weakest. You want to buy the thing that is the strongest. That's the main thing that you should probably look at. There's another market that was extremely strong yesterday after the Fed, and that was the Dow Jones Transportations. It's a huge move. In fact, it was one of the biggest moves we had other than the one in late August, right after the solar eclipse. But the transports had a move of almost 200 points yesterday, which is very unusual, and they went right up to just a tad above the 78% level. And if they continue on with any strength today, you could be looking at a potential new high also in the transports. I know it shouldn't be doing it, but they have not gotten the memos that I've been sending them, so we'll see what's going to happen. But the action is really not in the stock market, folks. I mean, we had a 14-point swing in the S&P yesterday. It's the first time we've had a what we call a usual swing, a normal swing in a very long time. But the real action has been in the metals markets and in the foreign exchange. Those are where the real things are happening. So that's where it's important, I think. So let's take a quick look. Someone's asked a question about the cattle market. First of all, I wanted to start out with the feeder cattle because this is one that Rich Anderson alerted us to a month ago. We were completing a big ABCD pattern in the feeder cattle down around the 137 level. But what I wanted to show you here is as we came into here Monday morning, you'll notice we were setting exactly at the 707 retracement, which we'd seen once before between May and June. So you're seeing a repetition of that. You had a beautiful ABCD pattern setting there. This market was poised to go down. And one of the things that we talked about in the newsletter for the futures part is that any strength in the feeder cattle would probably, really start to accelerate the regular cattle market, the October cattle. So we'll take a look at that in just a second, so we can take a look at it, and we'll be able to take a quick look at this regular cattle before the break. And this is the October cattle that had such a beautiful pattern down there at the 105 level. That was the first major ABCD since this bull market started well over a year ago. And now we're getting up where we had equal rallies. You'll notice the rally that we had between June and July and the one that we're having right now. It closed at 111, so it's going to be really close today. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from EverBank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. EverBank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to show you the chart that we were looking at in silver yesterday, and as you can see, that 382 level certainly didn't hold. We've broken down substantially below the $17 per ounce level in silver. That sets up a possible 61% retracement down around 1650. This is Thursday, and I'm not sure the importance of this new moon and this equinox that we have now, but historically they're pretty big. Whether this is going to be some type of a good bottom here in the metals, but it's broken below where I wanted to buy it, which was at 1296. So I would assume that we'll just wait and see over the next day or so if we get a smaller pattern that we can enter without risking, very much, because, gold. 1 second, please. Gold is a $130,000 contract, and it moves, $1,000 like butter melts. So you have to pay really close attention to your equity, or you could lose a great deal. So watch that, with a little bit of a close eye if you want to enter the gold market. I see nothing right now to tell me that this would be a good place, to enter the gold market. Someone's asked a question: would I be willing to buy bonds here for a rally? The news is out. They're pretty much going to raise rates in December. They didn't raise them this month. But, they've got to go through October and November. That's 2 months. The whole world could change by then, and they could be back to lowering rates at that time. So you don't really know. It has held the 61% retracement so far in the bonds. We're trading at 154.06. The number was 154.02. We did get as low as 153.20 something last night. I forget, 153.16. So we rallied about $600 off that bottom. So that's the main thing that I would be looking at. If to buy the bonds, you wouldn't have to risk anything more than our low yesterday, which is 153.15. But frankly, I don't think that's a good thing. I think the better trade was we just made a 382 retracement in the euro off the big move down. We dropped over 170 pips, folks, in a matter of 2 hours yesterday, and then we were able to rally back to a 382 after all the European trading last night. So that's the one that looks very interesting, because trading with the trend can be a lot easier, and you are selling against that 382 retracement at 119.20, and if it gets above 119.40, you would certainly be wrong. But for a shorter term basis, it does have some potential for a little bit of gain. The crude oil market. The crude oil was at moment of truth, as we know. As we came in here yesterday, we hit our exact number at 50.75 in the October crude oil. We highlighted that yesterday. We've only backed off about 60 cents off of that, but unless we can get crude oil above the $51 a barrel level, it appears that it's going to have a little bit of a problem, to make a really good move to the upside. So we got to get crude above that $51 a barrel level. You'll be able to see this here just a little bit. This is a day late, but you'll notice the highs yesterday were absolutely spot on here, and we'll take a look at it. The reason for doing some chatting in the Tiger Den today about the NASDAQ and its relative weakness compared to the others. Well, folks, you've got these stocks in the Dow like Boeing and some of these others that are just going absolutely nuts to the upside. Remember, these are price weighted. In other words, they have nothing to do with cap weighted. So they're price weighted, so the Dow can move very, very easily. The NASDAQ, they have about 20 stocks out of those 100 that run the whole thing, and they're acting very badly. There's no question about it. We've seen it in Amazon. We've seen it in, in Apple. Those are two of the very biggest. So that's what it looks like from a technical basis. Back to crude oil. We did make that ABCD pattern up there at that 50.75 level. We're trading around 50.30 or 50.40 right now, so nothing's really dramatic there. But we need it to close above 5,100 for it to be bullish, and then that would be a chance for for crude to make the second level, which would be $54. And of course, the news is that there's going to be a lot of shortages now because of the third hurricane, and I guess they have a fourth one coming. So this is certainly going to be one of the most active hurricane seasons that we've ever seen. And some folks are going to need some real serious help. I understand that Puerto Rico is completely out of electricity, and boy, if you've ever been to that place and you don't have air conditioning, you're in big trouble. I can't even imagine being in one of those hotels, those high rises, where you can't use an elevator and can't have air conditioning. This is going to be pretty tough on people that are on vacation looking for some rest and relaxation, and took advantage of the low rates that they have for traveling during the hurricane season. Well, that sort of backfired. All right, let's get back to the currency for just a second here. I wanted to talk about this because I think it's relatively important. This is the Japanese yen. The bottom that we have here on this chart, I've highlighted it where the blue line and the red line cross down there at that 107.25 level. That was the perfect 61% retracement on the long-term weekly chart. It also had an ABCD structure there, as you can see, between August the 7th and September the 7th. And we've rallied, as you can see, we rallied all the way up to almost the 61% retracement. That would come in exactly at 113, and we got to 112.80, which was a 1.618 expansion of the move between August the 28th and September the 7th. So that should be a little bit of a pullback here in the Japanese yen. And it's still in a downtrend. So if you're looking for a reason to short the yen, this is it, because you've got a really good correction. It equals the same corrections that we had during April and May and June and July, and here we are in September, and we've done the same thing. We repeated these rallies 3 times, and they've all been selling opportunities. So why would this one not be any different? So your stop would certainly have to be above the 113 level, but we're in an area where we have some serious numbers coming together here that would make it very interesting. We're already up 5 handles, folks, in 10 trading days. That's a big move. And for me, I would rather be buying the pullback as opposed to trying to place to short this, because any market that comes off a 61% retracement that quickly really is trying to give you a story that I want to go higher. So that's primarily, my game plan of the way I would plan to look at that euro. Now, we also had another currency yesterday. We got a break coming up, but we'll be able to cover this. Let's do the dollar index first, because this was the key, from my opinion, of why the rally was going to happen in the dollar index, i.e., lower euro, lower pound, and lower Australian, et cetera, et cetera. But we had held that 38% level at that 91.25. We're now trading above 92. And so that tells me that this market has made some type of a major turn here, and it's probably because the Fed has said rates are going higher and not lower. 877-927-6648.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from EverBank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. EverBank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're going to continue on looking at a few of these currencies. This is the Japanese yen, what we were expecting. As we came into Friday, you'll notice that we had made the 61% retracement, and now we've gone up all the way to the 78% retracement following the Federal Reserve. And as I mentioned, it's still in a bear market, but it had such a strong move coming out of here off of that 618 last Friday that my assumption is that this is just getting started, but all it takes is a really bad move down, and you could see more strength in the dollar. But right now it's set up pretty easily. All I feel pretty strongly about is that if we get above that 121 level in the euro now, from where we are right now at 119 and change, then I would say, you know, the dollar is going to get hit really badly and probably get down to the area of around 88 to 85 in that dollar index if it can do it. Now, if we look at the British pound, you'll notice that we had these multiple. Let's put these up so everybody can see them, Larry. Okay. All right, there we go. As you can see, we had several ABCD patterns coming in here. We got up to 136 and change. We took out last week's high by 1.27 in a fast tick. And folks, it went from 136 and change to 134 or 135 and change like a Formula One racer. It was so fast that you couldn't even have entered it from the short side. Well, you could have, but it was wild. And in fact, they were all wild, the euro, every single one of them. And if we take a look at the Canadian dollar, this is a long-term weekly chart that we have some really important patterns that are coming due. This should work, even if we get a good bounce here off of the 121 level in the Canadian dollar. We could rally up to the 125 level, and that would set up another ABCD, bringing us down to that 115 level, which is the 61% retracement, or the low from 2012 and 2011. So that's what we're watching in the Canadian dollar. That hasn't changed very much, but it's still has active patterns. Now, the one we did mention yesterday was the Australian dollar, and we did have a very nice move in the Australian dollar. We rallied back to the 78% level of the previous day's high, where that shooting candle was, up at that near the 81 level, and we immediately dropped over 100 pips. and that would tell us that we're going out. Oh, boys and girls, my little thing on the wall is telling me that we just made the 382 retracement in the euro. So keep an eye on this one here. It's going to be very interesting to see what happens. We just hit it. So, okay, let's take a quick look here at the gold market. We're now trading at 1295. We're completing a small ABCD pattern here. It shouldn't mean very much as far as a rally, but let's just double check it here. Yeah, just another small ABCD pattern. I would be surprised. The bearishness in the gold now is really taking hold, folks. So I wouldn't think the gold would get much above 12.99 today. If it does, that means that this day that we had so far this morning could have been a washout. But until that happens, I have to say this has a bearish tone to it, by a long stretch of the imagination. That's what I would be, paying attention to. So that's how I see it, whether it works or not. The crude oil is weakened a little bit. We're down about 60 pips from the high. We need to get crude oil above that 50.90 level basis, the October crude, or we're most probably getting ready, to go lower. One of the questions, if you're in the cattle market, folks, you want to be taking profits in cattle this morning. We've had one heck of a run here this week. We're up about almost 5 cents a pound, and they might have some more going to it to the upside. But this is be a pretty good profit for you if you bought at that 105 level, and I would suggest that you book some profits on that. And as far as the stock market, I am waiting till tomorrow. I want to get this cycle stuff out of the way here that we have. And believe me, this is going to be a relatively slow day in New York because many of the traders there are of Hebrew religion, and they don't even come in today. So it's going to be a relatively low trading day, I would believe, especially with the banks. So this is another reason to take a quick look at these things for tomorrow and not for today. The bonds have perked up now. We've taken out the high of yesterday in the bonds, which is a positive sign. The high yesterday was 154.14. We've already taken that out with negative news hitting the market. So that 61% retracement at the 54.02 level could be very, very important support now because the fact that it's come back above it, and with the bearish news that we've had in the bonds, that it didn't break down. So that level we were looking at 0.618, I frankly, I don't know how you risk more than a half a point in bonds. It would have been just about spot on getting stopped out at the low of the day. But 154.02 was the exact number, and our low yesterday was 154.14. So now we're a whole handle higher than that right now. So if you want to enter the bonds, the best thing to do, and it's very oversold, it's been down for 10 days, is to watch for a little bit of a retracement. In other words, you've had a 32 pip move. Watch for a move back to the 154.04 level, which is the 61% retracement, and then you can put your stop in of a half a point and see if it's going to work, because it is very, very oversold in the bond market without any stretch of the imagination. We're trading at around 2,500 now in the December S&P. That's down 61% from the low we made last night at 12 after the Fed. And but we come down so swiftly this morning, you want to make sure this level of 2,500 holds, because if it doesn't, you're looking at some ABCD structures heading lower, and we've got some major stocks there that are not doing very well, and that's the main thing that you want to keep an eye on. One of them, let's take a look here at one of these others that's out there, which is Google. Google is also making lower highs. This is not a bullish pattern in Google. As you can see, we've had very little rally over the past week. And if we take a look at Facebook, it looks better than any of them because it's still in this high level trading range in Facebook between 175 and 165. Boy, it's hard to believe this thing traded at 29 right after it was issued. Anyway, okay, that's what we're watching here. These, we got to take a break here pretty soon, but we got one other thing I wanted to show you before we get to the next break, and that is the Treasury bonds on this little bit longer term. Hold on, let's get this up so we can take a look at it here, and you'll be able to see it. Okay, and there we I don't think there's going to be any boat ride in the bonds, folks. If those bonds go up above the 160 level now, I'm going to have to get a new burro. Walter's going to not be able to carry all the things that I'm going to need to survive out in the desert. Anyway, that's about it. I'm just not a boat person, folks. So the understatement of the year. We'll take a little break here. 877-927-6640.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we are setting pretty close to the 61% retracement of yesterday's range in the E-mini S&P. That number comes in at, in fact, we're below it now at 24.98.5. We're trading at 24.98. The ABCD structure on this, folks, takes the market down to 24. 24.90 today. That's down another 8 points, and we're trading, with these early morning selling, we could still get a little bit more of a movement to the downside. So we want to be able to look at. Oh, we've got a call from John in Detroit. John, are you there?
Yes. Hey, Larry. Great to hear you again. I love listening to your show. I listen every day. I just wanted to call and remind you of Norm Winsky's call the other day. He said on the 21st, and I quote, this is what Norm said, "We're going to see a negative cycle, change in trend in debt and bonds." And then he followed it up by saying we're going to see on that day death, destruction, and disruption in government. And, when you look at the earthquake in Mexico and the annihilation of Puerto Rico by that hurricane, I mean, this guy was right on the money.
Yeah, he does.
Scary.
That's what makes you interested in astrology. Stay there, because even though you're wrong sometime, that's it. But listen, our show's ending, but we really appreciate you calling in, John, and I hope everything's okay for you in Detroit.
Everything's great, Larry. Thanks very much. You have a great one.
Yes, and thanks for listening in. He's right, folks. Norm Winsky does a great job, as does all of our guests that come in. We've been very fortunate to have some really sharp folks, and we will have Stan Hartley on next week, and also Bill Meridian, and maybe Rich Anderson again to talk to us about this cattle market that seems to be on fire. So I guess we got the shows coming to an end pretty closely here, but remember, we're heading for around 24.90, it looks like, in the S&P as a minimum, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop.